A court ruling released just today clears the way for California's largest insurer, State Farm, to move forward with significant rate increases for homeowners as well as renters. Welcome, everyone, to The Four this afternoon. I'm Alex Savage.
And I'm Heather Holmes. In that ruling, a judge called the increases fair and necessary. And shortly after that decision came out, well, the state's Insurance Commissioner Ricardo Lara announced that he has, in fact, approved the rate hikes. So starting next month, homeowners will see their rates go up an average of 17%, while renters and condo owners will see prices increase by an average of 15%. And rates for rental homes will go up by 38%.
State Farm has said the rate increases are necessary to help shore up the company's finances as it faces up to $7 billion in claims from those devastating wildfires in Los Angeles County earlier this year. Just last year, State Farm got approval for a major rate increase, and that one raised prices by an average of 20%. Consumer watchdogs opposed this latest request, saying that State Farm has not justified the need for another rate hike.
Okay, so let's talk about this because it does affect so many people. With insurance industry expert Carl Sussman. Carl, really appreciate you joining us this afternoon. I want to get your reaction to what happened today. Is this something that you expected?
Absolutely. This is something that I was hoping was going to happen. I just wish it didn't take all these weeks to get it done because contrary to what Consumer Watchdog is saying, thinking that they weren't able to justify it, a judge clearly thought they could and did. And that was the ruling that he came down with today.
This is not the end of the process, though, because as I understand it, the California Department of Insurance is going to hold another evidentiary hearing on this rate increase later on this year in October, and State Farm again is going to be asked to justify the request. What happens if the judge then decides that these increases, which will have already been in place, aren't necessary?
It's a great question, Alex. What happens is the usual process for a rate change takes months, sometimes years to get done. But because of the dire circumstances, State Farm put in a request for an emergency rate increase. So the judge looked at the evidence, said, yes, I can see that's necessary, and he approved it. The Department of Insurance said, okay, fine. Now, that doesn't mean that that just gets to be the way things are going forward. Those rates will go into effect on June the 1st. Now, between now and October, there's going to be a full hearing where State Farm has to open up their books once again and justify all of these rates that they're getting increases on. Keep in mind also that part of the arrangements for this to be done so quickly was State Farm agreed that if it turns out that when that full hearing comes down, for some reason they're not able to show what they've already shown once, then they will refund all of that additional premium plus interest to all of the affected policyholders.
Okay, Carl, though, when we look at this, this is not only increases for homeowners, but also renters. Explain why.
Well, anytime there's any type of rate increase, there's usually three categories for property. It's broken down from property insurance for homeowners, for condominium owners, and for renters. And this impacts all of them because they're all having the potential to have wildfire exposure. We had a lot of losses for condominium associations and individual units actually in the Southern California fires that happened just in January.
Okay, so this is obviously a rate increase approved for State Farm, the largest insurer here in California. Are we expecting that other major insurers here in the state are going to follow suit here with State Farm and request additional rate hikes?
Well, what's interesting is State Farm didn't just request a rate hike. They filed on a very specific part of the regulation that says basically we need to be bailed out right away. We cannot wait. We are in financial dire straits. I don't think any insurance company is going to want to throw their reputation in the toilet and say, we're broke, we need money just to get a few extra points. Now, I do believe that we are going to be seeing other insurance companies raise rates because the exposure is simply higher now and everything is costing so much more money to begin with. But as far as what other carriers will do because of this ruling, there's no connection between the two.
Okay. And what about the pushback, Carl? Because there are a lot of people who are looking at this and saying, this is a profitable company. This should not be passed down on those who are paying these rates.
That's a great question. And the truth is State Farm is profitable in states where it's allowed to underwrite risk, and they make money in those other states. In California, where Proposition 103 prevents them from actually rating risks the way they normally do in every other state, they're not profitable. So we have to decide which way we're going to do it. We're either going to allow companies to underwrite charge adequate rate, and then we won't see rate increases like this, or we're going to have to expect that when large events like this happen, they're going to have to play catch up.
Okay, I think you know, a lot of people might be hearing this too and wondering, okay, you approve this emergency rate hike for State Farm here because they are in a dire financial situation, but this can't be an open-ended rate increase. So is there any sort of timeline on how long this latest rate hike will be in effect?
Well, it's going to be in place until the next hearing, where the actual hearing goes down, where they're going to have to justify in full these rates that they just applied for. Now, assuming that they are justified, then the rates will remain. If it turns out that they become, they're not able to justify them or they're showing to be excessive, then they'll be rolled back to what they were prior to June the 1st when they begin going into effect.
Okay, and I know that you don't have a crystal ball, but if we can look ahead to October, when this whole thing is reevaluated, any outcome prediction there?
I can't imagine